We live in a world powered by, well, these tiny chips, right?
Yeah,
Everything from your phone to your car.
absolutely.
But the name behind so much of the really cutting-edge stuff, TSMC, maybe not one you hear constantly.
Yeah, Taiwan Semiconductor Manufacturing Company. But they're dominant. Think of them like the master chefs for the tech world.
Ah, I like that. Crafting the silicon for, well, almost everyone who matters.
Exactly, for a huge list of top tech companies.
And that's exactly what we're diving into today. We've pulled together quite a bit of info, financial reports, analyst ratings.
Right, and industry insights too, like from the SemiVision newsletter, which really focuses on this whole ecosystem.
Yeah, and even some online chatter just to get a rounded view. It's all looking at TSMC around April 2025, trying to figure out where they stand and, what might be next.
So the goal really is for anyone listening to get a solid grasp fast without getting lost in the weeds.
Exactly. Unpack the recent market stuff, future prospects, keep it clear.
Okay, so where do we start? Maybe the stock price.
Mhm.
Last 6 months or so?
Sounds good. We don't have like the minute-by-minute ticker, obviously.
No.
But the overall trend, it definitely shows some big moves.
Right. Like back in February 2024, didn't the stock hit a record high?
It did, yeah. And that surge really seemed to underscore the market's belief in TSMC's role in the whole AI boom.
It was almost directly linked to how people felt about Nvidia, wasn't it?
Totally. Nvidia's target goes up, TSMC stock follows. It showed that connection.
Then fast forward a bit to April 2025. We saw some declines, right? Pullbacks.
Yeah, some dips. And what's interesting there, the trading volume.
Ah, okay. High volume on those down days.
Often, yeah,
Yeah.
really high. We're talking averages of, what, 15 to 20 million shares traded daily for their ADRs?
The American depository receipts. So basically the shares people trade easily in the U.S.
Exactly. And that much trading when the price is dropping,
Mm-hmm.
it suggests, a lot of selling pressure.
People getting out.
Or taking profits, maybe. And the indicators back this up. Volume balance stuff, we're showing negative readings during that April downturn.
So more forceful selling than buying on those down days. Like you said, negative sentiment.
Precisely.
Okay, so putting that price action and the volume together, what's the technical picture look like, say, mid-2025?
Well, it sounds like there's a bit of a disconnect, maybe,
How so?
between the company's, fundamental long-term story, which seems strong,
Right, the AI demand, the tech leadership.
and these shorter-term technical signals. They seem a bit more cautious, bearish even.
Yeah, that's a good way to put it. A divergence. The fundamentals look good long term, but the near-term technicals are flashing some warning signs, or at least suggesting momentum is shifting downwards for now.
Like the car analogy, you've been going uphill, but maybe rolling back just a touch.
Exactly. It creates this tension. Is it a buying opportunity because the short-term dip is temporary? Or a warning that maybe something else is brewing?
Interesting. So traders perhaps a bit more wary than the long-term investors right now.
Seems that way.
Okay, so speaking of investors, let's shift to the big players, the institutional money. Where did that info come from? 13 Fs.
Yeah, mostly 13F filings. They're basically required reports from the big investment managers, anyone handling over $100 million.
Gives you a peek at what the mutual funds, hedge funds, the big dogs are doing.
Exactly, what they've been buying and selling each quarter.
So what have the last couple of quarters shown, say the last 6 months?
Well, it's a bit of a mixed picture, actually. You had some institutions increasing their holdings, Canoe Financial LP, for example, and Johnson Investment Council, Inc.
Way about more shares.
Yeah, Canoe especially added a pretty decent chunk percentage-wise to their position.
Okay. What about the overall trend? More buyers than sellers?
Looking at NASDAQ data for Q4 2024, yeah. It showed 1,325 institutions adding to their positions versus 971 cutting back.
And nearly 300 just held steady.
Right. And other data, like from Fintel, also suggested a net increase in shares held by institutions in the most recent quarter they reported.
So despite some selling, the overall institutional tide seems to be flowing in, generally speaking.
It leans that way, yeah. Suggests a generally positive long-term view among many big investors, which can be, reassuring.
Who are the absolute giants holding TSMC?
Well, as of February 2024, BlackRock was the biggest. Huge number, over 1.3 billion shares.
Wow, what percentage is that?
About 5.1% of the whole company. Vanguard's another massive holder, though they did trim their positions slightly late last year.
And I heard something about hedge funds maybe reducing stakes.
Yeah, there was a period mid-2024, I think, where some hedge funds collectively seemed to reduce their holdings a bit.
Why would they do that? Just profit taking.
Could be. Or rebalancing, maybe some concerns about the market overall, or those geopolitical factors we keep hearing about.
Ah, yes, the geopolitics. Which brings us to Berkshire Hathaway, doesn't it? Their big sale back in early 2023.
That definitely made headlines. Warren Buffett's company selling off a large part of their stake.
And they were pretty explicit about the reason, weren't they?
They were. They cited geopolitical tensions specifically. It was a significant move from a very closely watched investor.
Okay, so institutions, generally positive lately, but with some notable exceptions, and that lingering geopolitical concern highlighted by Berkshire.
That sums it up pretty well.
Right. Let's zoom out now. The 3-year view. How's the stock performed over that longer time frame?
Pretty impressively, actually. From April 2022 to April 2025, the return was over 63%.
63%. That's strong. How does that compare to, say, the broader market in Taiwan?
It blows it away, basically. The main Taiwan index, the TWII, was only up about 10% over that same period.
Wow. Okay, so TSMC significantly outperformed its home market.
Massively. Really highlights its growth story.
Were there key moments or, financial results that really drove that performance over those 3 years?
Oh, definitely. You had some huge inflection points, like Q4 2024, record profit.
How big a jump was that?
Net profit up 57% year over year, and record revenue, too, up over 34%. Numbers like that get investors excited.
You bet they do. That explains a lot of the lift.
Right.
What else?
Well, going back a bit, January 2024, they gave a strong forecast for whole year, said revenue would grow over 20%.
And they linked that to AI demand back then, too.
They did. Explicitly cited AI as the driver. Then, more recently, Q1 2025 results came in strong 60% profit growth year on year.
60%.
Yeah. And importantly, they reaffirmed their positive outlook for the full year, again pointing to that strong AI demand.
So it seems like stellar earnings and that clear AI narrative have been the big engines for the stock long term.
Absolutely. Major tailwinds.
Okay, so that's the history. What are the folks whose job it is to analyze this stuff saying now? The analysts. What's the consensus?
Right, the professionals. As of April 2025, the consensus among, I think it was 13 analysts covering the stock. It's strong buy.
Strong buy. Pretty unambiguous.
Very positive, yeah.
What about price targets? Where do they see the stock going?
The average target is sitting around $219.43.
Okay, $219?
Yeah.
And it compared to where the stock was trading in the sources, like $151.
Yeah, one source had it around $151.40 as a reference. So that average target implies, significant potential upside from that point.
So analysts, on average, think there's still quite a bit of room to run.
That's the general feeling, yes.
But have those targets been stable? Any recent changes?
There have been a few slight adjustments recently. Barclays, for instance, lowered their target a bit in April. Still kept a positive rating, though, overweight.
Okay, so trim the target, but still bullish overall.
Exactly. And Buffett and JP Morgan did something similar around the same time, small reductions to their targets, but they both stuck with buy ratings.
Why the slight trims then?
Seems like it was mostly due to some caution about near-term demand in maybe some non-AI sectors. A bit of near-term noise, perhaps.
Got it. So even with those minor tweaks, the overall analyst view is still very much positive, especially long-term.
Overwhelmingly so. The main story they're all focused on is TSMC's tech leadership and its central role in AI. That hasn't changed.
Right. Let's talk about that future then. What are the catalysts? What's going to drive that growth analysts are expecting?
Well, number one is just their relentless technology advancement. They're always pushing the boundaries.
Like the nanometer race?
Exactly. They're currently cranking out 3-nanometer chips in high volume, N3, and they've got variations like N3E, N3P, N3X for different needs.
Smaller number means more power, more efficiency, right?
Generally, yes. More transistors packed onto the silicon, crucial for everything from smartphones to AI servers.
So they're not stopping at 3-nanometer, obviously.
Oh no, the roadmap is packed. 2-nanometer, or N2, is slated for mass production in 2025. That's a big step, using new nanosheet transistors.
Nanosheet. Sounds fancy.
It's a different transistor structure, meant to deliver better performance and power efficiency. And they're already talking about A14, which is 1.4 nanometer.
1.4 nanometers. That's incredibly small.
It really is. Plus, a variation of N2 with something called a backside power rail is planned for 2026. More innovation.
So constantly staying ahead on the core chip tech. What about putting them together? Packaging.
Ah, yes, advanced packaging. That's becoming hugely important, especially for AI.
Why is that?
Because AI chips are often complex combinations of different components, you need really sophisticated ways to connect them tightly together for speed and efficiency. TSMC's 3D fabric platform with things like CoWoS and NFO, that's their answer.
CoWoS. That sounds familiar.
Yeah, CoWoS chip on wafer on substrate. It's critical for high-performance computing and AI accelerators. In fact, demand is so high for AI that there are reports of potential bottlenecks in CoWoS capacity. They just can't make enough of it fast enough.
Wow. That really drives home how essential they are, if even their packaging is in such high demand.
Definitely. Their own management basically said, for top-tier AI hardware, all roads lead to TSMC.
That's quite a statement. Do they put numbers on that AI growth?
They do. They're forecasting a mid-40s compound annual growth rate for their AI accelerator revenue.
Mid 40% CAGR over 5 years.
That's the forecast. It's a massive growth engine for them.
Okay, so tech leadership, AI demand.
Mm.
What else? Are they spreading out manufacturing? We hear a lot about diversification.
Yes, global expansion is a huge part of their strategy, partly for growth, partly to, manage risk.
The Arizona project is the big one, right?
It is a major investment. The first fab there is already running high-volume production on their N4 process.
And more planned.
Oh, yeah. Plans for N3, N2, even A16 down the line in Arizona. But it's complex. It's technology potential issues, yeah. Construction timelines, finding enough skilled workers. It's not easy setting up these incredibly advanced fabs somewhere new.
And it's partly about reducing reliance on Taiwan, given the geopolitics.
That's certainly a major factor. Diversifying the manufacturing footprint is strategically important.
Are they building elsewhere, too, not just the U.S.?
Yep. Japan, their JASM fab in Kumamoto started volume production late 2024.
What kind of chips? The most advanced?
No, that one's focused on slightly more mature nodes, 22, 28 nanometer. Important for things like cars and consumer electronics. And they're already planning a second fab there.
Okay. And Europe?
Dresden, Germany. That's the plan. ESMC, a joint venture aiming to be operational by 2029, focused on automotive and industrial chips.
So a truly global manufacturing network taking shape.
Slowly but surely. It's a long-term play.
What are their big-picture financial goals tied to all this through, say, 2029?
They've laid out some ambitious targets. Revenue growth AGR approaching 20% in U.S. dollars.
20% growth per year, compounded, for a company that big.
It's ambitious. Plus, they're aiming to keep gross margins at 53% or higher and return on equity above 25%. Very strong financial targets.
And one last thing, sustainability. Seems important these days.
It is. They have a goal for 100% renewable energy use globally by 2040. Given how much power these fabs use, that's a significant commitment.
Okay, wow. So let's try and wrap this all up. Key takeaways.
Well, number one, TSMC is the undisputed leader. Strong market position, clear technological edge, especially at the leading edge, where competitors like Samsung and Intel are still, frankly, struggling to win the big external deals consistently.
Right. And the analysts are overwhelmingly positive long-term.
Yes, driven almost entirely by that AI megatrend. Plus, you have the strategic global expansion happening.
Well, it's not all smooth sailing. Risks are definitely there.
Absolutely. Geopolitics around Taiwan is the big one, the elephant in the room that influenced Berkshire Hathaway, and just the sheer complexity and cost of building and running these fabs globally. Delays, talent shortages, cost control are all potential bumps.
And as we started with, those near-term technical signals are showing a bit of weakness, or at least caution.
Yeah, that divergence between the short-term chart picture and the glowing long-term fundamental outlook is really interesting right now.
It makes you think, doesn't it? You have this company that's so critical to everything tech.
The linchpin.
Yeah, and this massive demand wave with AI. So the provocative thought maybe is, given that pivotal role, how vulnerable are they really? Or how much stronger could they get if, say, geopolitical tensions ease, or if they have another major tech breakthrough?
That's the multi-trillion-dollar question, isn't it? How do those big external forces, politics, technology shifts ultimately shape their dominance in the years ahead? It's something to watch closely.
Definitely. And for folks who want to keep watching that semiconductor space closely.
The Semivision newsletter is a great resource for digging deeper into that whole ecosystem.